What's up, everybody? My name is Ryan, and today I want to talk about briefly whether it might be a good idea or not a good idea to turn your business into an S Corp. Now, you probably heard this strategy before. If you have an LLC, maybe people tell you, hey, you should get it turned into an S Corp for the tax savings. And I'm just going to talk about what that entails and the complexities that might be involved and whether it's a good idea for you. So the first things first, like, how does it save you money? Well, when you're self-employed, if you have, if you're a sole proprietor or an LLC, or if you form like a partnership with some of your buddies, when you make money in your business, a net income, you get taxed with income tax, and you also get taxed with something called self-employment tax, which is your Medicare and Social Security. So self-employment tax comes out to roughly 15% of your net income from the business, or your share of the net income. So that's on top of income tax. Okay, so 15%, that's pretty significant, right? So the idea behind switching your business to an S Corp is that you basically eliminate the self-employment tax. If you're making 100 grand in your business, that saves you about $15,000 just by doing the S election. So that sounds like a slam dunk, right? Well, not really, because like everything, there's always downsides, there's always complexities. So something that doesn't get talked about enough, I think a lot of CPAs or a lot of accountants just blindly recommend S Corps to their clients, but they really should consider the full picture of their business and their goals and really what their clients want. So when you switch to an S Corp, there are limitations and there are more complexities you have to be aware of. So with the complexities, as an owner of the S Corp, you actually are required to pay yourself a reasonable salary through a W-2. And that means that you have to file payroll taxes every quarter, IRS Forms 941, and you have to do that probably with your state too, your state payroll taxes. And you got to file with your federal unemployment taxes, and depending on the state that you're in, you might have requirements for unemployment insurance and workers' compensation insurance. So lots of stuff there just to be able to pay yourself a salary. The next thing you got to be aware of is that you need to keep proper accounting records, proper financial statements. A lot of single member LLCs or sole proprietors, when you're just filing taxes as a self-employed sole proprietor, many business owners like to keep their books on maybe an Excel sheet, or they have some little system they got going on, and that usually works with filing as a Schedule C. But when you're filing as an S corporation, you do need proper financial statements, which means you do need to get proper bookkeeping software. Now, that's something I recommend anyway, even if you're a sole proprietor, but that could be an additional cost and additional processes that you have to manage as a business owner if you haven't been doing that. Filing as an S Corp also means you're filing an additional tax return that's due a month before your personal taxes. So the Form 1120S is the S Corporation tax return. It's just a different tax return you have to file first, and that's due March 15th. And usually there's costs associated with filing the S Corp return. And then lastly, if there are multiple owners in the business and you choose to elect an S Corp status, then you really have to be diligent and careful with owner distributions. Now there's the 15% tax savings that you get from electing an S Corp, but there's also additional costs associated with making sure your S Corp is remaining compliant. So first is payroll. Obviously, if you don't want to be, filing W-2s yourself or the quarterly payroll tax forms yourself, you probably would want to hire a payroll company to do it for you. That really simplifies the process, but that does cost you money. And also, if you're not using like bookkeeping software already, then getting a bookkeeping software will cost you money as well. And obviously, the extra tax return, in my company, filing an S Corp tax return is much more expensive than just filing your business as a Schedule C. And then lastly, depending on your state, you might have unemployment insurance and workers' comp insurance that you also have to buy for yourself. So when should you really take a pause and maybe consider not electing an S Corp? Well, first is if you have many owners in your business, electing an S Corp can really limit the flexibility that you used to have before as a partnership. So really take a pause there if you have a lot of owners. Usually S Corp elections work best with single owner businesses. The other thing too is if you're a business looking to get capital through equity, like selling shares or getting investors that way, having an S Corp could really limit you there, so you probably don't want to do that. If you want to keep your taxes simple, definitely don't elect an S Corp. And if you have any doubts at all that you might have trouble staying compliant with all the rules of being an S Corp, then you probably take a pause and think about whether or not you want to do it. Okay. And then like the last thing, obviously, if you're not paying self-employment taxes, you're also not contributing to your Social Security funds, for when you retire. Now, most people aren't really concerned about that because the ROI on that is really piss poor, but just something to consider as well, to make an informed decision. So that's all I got for this video. I know it was very quick. There's plenty of things to consider when deciding to elect an S Corp for your business. So definitely talk to your tax advisor, tax professional before you make any moves. All right, that's all I got. Take care for now, and I'll see you next week.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a stick up. She picture perfect, so I told him I'm a flick up. Bill, I'm in the mood.